Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Will James, manager of the Standard Life Investments European Equity Income Fund. Hi, Will.
Hi.
So we have faced quite a lot of political turmoil in the UK and the US in 2016. However, 2017 is going to be the year of European geopolitical concerns and uncertainties. How do you, as a European equity fund manager, manage money in that environment?
Well, firstly, I think we've had a pretty good experience at navigating political turmoil over the last sort of 5 or 6 years. I mean, we've seen everything from sovereign debt crisis, the Greek crisis. So we feel as if we've got a fairly thick skin when it comes to sort of political crises. The way we look at investment at Standard Life Investments is just really to make sure that we're comfortable with the type of investments, type of companies that we're wanting to invest in, that we're comfortable with the fundamentals, comfortable with the business models, comfortable with what is priced in versus the expectations that the market may have, albeit very, very cognizant of the macro and the political situation. So I think we're ready for it. I think the one thing that we know for certain is volatility will be here. And we've seen that this year, obviously in different regions, and we wouldn't expect that to change really next year. But I think the market has got used to a level of political risk. It has been reflected in share prices to a degree, and we've just got to be able to navigate that as effectively as we have done in the past.
As well as the sort of political uncertainty, we've got the Italian referendum, French and German general elections. Yes. Also, the backdrop for Europe is the central bank easing. We've obviously had quantitative easing in Europe for some time, and we've got Mario Draghi saying that whatever it takes statement that looks like it's going to continue to set the theme in 2017. Yeah. That, of course, has had an impact on asset prices. You, as an income investor, will know that low bond yields has pushed people into certain income stocks, which have pushed up prices. Yeah. I mean, how much higher can these go, or will we see a correction in that?
Well, I think we've actually seen a bit of a correction over the last sort of six to sort of 8 weeks, to be honest. We've been very, very cognizant of that risk. So at the end of 2014, where in fact we started to see a real flood into the sort of bond proxy type names that we'd traditionally been quite comfortable investing in, we took a very, very hard look at the valuations and a very, very hard look at who the marginal buyer of those equities were. And therefore, we've been fairly early, I think, to be able to identify the risk to that bond proxy argument. So as a result, we have been cognizant of the downdraft that could come as a result of the market's reassessment of rates, of growth, of returns. And I think, to be quite honest, we've started to see that a bit, especially post the Trump result last week. So, as ever, we really feel that you've got to be very, very valuation sensitive in these type of markets. So where we are today and looking forward, some of those bond proxy type names are actually, post the last sort of 6 or so weeks, have started to become a bit more attractive from a valuation perspective. And when we look at next year, and I think the debate is, the sort of, I suppose, we'll have to see what happens. But if the Fed starts to move, the question for the market, as it is questioning at the moment, is does the Bank of Japan, does the ECB start to use that as cover to start thinking about a different approach to the monetary easing that we've seen over the last period? So I think it's going to be a really interesting time into next year in terms of that market dynamic. And we think that actually an environment that is predicated at this point in time of low growth, low rates, low return is being challenged. And I think fund managers and the portfolio has to be ready for that particular challenge, and I think we are.
Well, thank you very much.
Thank you very much.
This is Emma Wall for Morningstar. Thank you for watching.